Dr. Webb, nice to meet you again, but first time in person.
Nice to be here.
So you are the CEO, you're also a founder. Are you a founder?
Yes, in an odd way.
In an odd way, of 60 North Gold. Okay, so let's talk about your the shares outstanding right now. Has anything changed over the last 9 months? Have you done a raise?
We've done a raise. Actually, the sequence is we did a consolidation and then a raise.
Okay.
So we brought it down to, at the time it was 21 million shares, roughly.
Yeah.
All of the warrants and options are tremendously out of the money. And then we raised enough money to continue on. It's a daunting task, but in talking to the other junior companies here at the PDAC, when are you not raising money?
Yes, absolutely. It's and you know, it's been a soft market. One of the questions I wanted to ask you was, where do you think the U.S. dollar is headed? Where do you let's say like a 6-month horizon? Where do you think the U.S. dollar is going?
That's my favorite question. I think people love the U.S. dollar right now. They see that the government seems to be doing what they say they're doing, and Bitcoin and the cryptos have fallen a little bit out of favor. So it looks good short term, but I think long term, U.S. government's going to be running deficits. They're going to be borrowing money and printing it, and it's not going to change.
So then I asked you that question because that kind of means that short term, you'd most likely be a little bearish on gold, but long term, you're bullish on gold.
Absolutely.
Okay. So let's talk about sort of, I remember 8 months ago when we did an interview, it's about 8 months ago, you were explaining to me how, you know what, we're not going to bother with a bunch of feasibility studies and PEAs and all this stuff, because at the end of the day, it doesn't really make sense for you. It's a lot of capital you got to put out, and you have a pretty good idea of what you have. So you're going to start mining this and actually generate cash flow.
Yes.
Sound about right?
Yes, it's a different way of doing things in today's market, but it's very, very much the way things were done 50 years ago.
Right. So, you know, walk us through where the mine is, where the mine's going to be.
Okay. I guess the first thing is, if you're looking for a gold mine, the best place to look is where they mined gold before.
Right.
And we selected Yellowknife for a number of reasons. One of which, it's home to some of the highest grade gold mines in Canada. The average production grade for the 3 big mines that have produced over 15 million ounces of gold is over half an ounce of gold per ton, or about 16 grams of gold per ton. So, nice place to look. Mm-hmm. So we went to Yellowknife, and I've been up there for quite a long time. I did my master's thesis on the Con Mine, and I did a PhD on structural controls on gold in Yellowknife. So it's kind of my specialty, and I've found quite a bit of gold in Yellowknife. So we zeroed in on both a high-grade gold mine, past producer, and lots of potential.
So how much gold can you pull out of this thing a day? And how long, well, I guess 2 questions. How long until you can actually mine it? And then how much gold can you pull out a day?
Okay, we'd operated here, and that's me, a technical partner and a financial partner, operated here back in the 90s at 100 tons a day. Sounds like a relatively small gold mine at 100 tons a day, but when you're running 1 ounce per ton, which is what we had ended up operating at, 100 ounces of gold per day, it's quite a bit of gold, and you can, you know, pay for your cornflakes this way. How much do we have? And that's the difficult question. This is the 43-101 approach to it. We could spend about $6 to $10 million to try and drill off a resource and get independent people to review it and go through the PA, pre-feas, feasibility study. Or for less than that, we can start mining it. And because it was a past producer, we were able to get our permits grandfathered, actually, but updated to today's standard with First Nation consultations, etc. And we can start producing at 100 tons a day. Now, we know that the Discovery Mine, which is one that looks very similar to what we actually are operating, it went down from surface, where it's exposed in a folded quartz vein. It goes down 1,200 meters to the bottom of their shaft, and it continues beyond there, but they didn't have access below the shaft bottom. The Giant Mine to our south produced 8 million ounces of gold at a ½ ounce per ton. They went down to a depth of 900 meters, and the Con Mine went the deepest. It produced 6 million ounces of gold at a ½ ounce per ton, and they went down to 1,900 meters below surface. We, on our property, started operations in the 1990s, and we went from surface down 15 meters. So we have scratched the surface. We have drill holes showing mineralization for another 40 meters below that, and we're just going to ramp down and start mining starting 20 meters below the old stopes and take that up, and that should be somewhere around 40,000 tons of quartz vein. I would say ore if we had all the studies done, but I can't use that word.
Yeah, you can't. You're kind of stuck with what you can say based on not having that data. But it is not hard to understand why you're not taking that approach. So when can you guys start mining, and how much money is it going to cost you to do this? And you know, how much do you have in the treasury right now to even do it?
Yeah, we've been working on this. Well, I've been working on this since the 1990s when my first production. But the financial partner rightly shut things down when gold went down to $256 an ounce. And it was very difficult to make money. In fact, I don't think any gold mine in the world was making money, with very, very rare exception. So
would have been a good opportunity to start buying gold, wouldn't it?
And guess what I started doing?
Buying gold.
I started buying gold. So yes, I started acquiring little gold bars at that time. The price was right. If you can't make it at a profit and they're still selling it at that price, buy it.
Mm-hmm.
So
if you believe in it.
I absolutely believe in it.
Yeah.
In about 2010, we started working pretty hard on renewing our licenses and making sure everything was up to speed. We obtained those licenses and permits in 2012, and I started seeking financing to help get this thing going. We're at a stage now where 60 North has financed $6 million on the property. That's allowed us to acquire mining equipment, camp equipment, support equipment. We have all the compressors, the scoop trams, the trucks, the shovels, all set to go. The next stage is a $2 million mining, extending the ramp into the vein and starting to extract a bulk sample. And that will allow us to get about 1,000 tons of quartz vein up on surface. And we can start anytime, but preferably we would start in May when it's nice and warm and easy for us to pump water without worrying about shutting the pumps down and blowing our pipes out as they freeze.
So is that your plan, is to start in May and get this going?
Yes. In talking to people here at the conference, I've zeroed in on a new way to describe it. And that is, the question is, well, why don't you just drill it?
Right.
And I said, well, you know, with a standard drill, you need 2 drillers for day shift, 2 drillers for night shift. You need the geologist. You need the 5th man to help move things. You need the cook, medic, and camp. You need 8 people. To mine it, on the other hand, at 100 tons a day, we need 2 miners on day shift, 2 miners on night shift, the geologist, the camp, cook, medic. You need the same number of people. And you don't exactly pay your cook and medic more because it's a drill program or a mining program, or your geologist more. You know, the costs are very, very similar. The difference is we have millions of dollars worth of equipment in there versus hundreds of thousands of dollars for drills. So it's more expensive to get up and starting, but to operate, it's almost the same.
Okay. So what multiple do you think that this stock should be trading, your stock should be trading at once you start operations?
Well, subject to financing, and I'll throw that out there, because if there's no money, nothing's going to happen. We have shareholders who despise us raising money because it's dilutive in their opinion. And they're right. Myself being the largest shareholder of the company, I've got 27% of the stock. I don't want to see any more stock go out there than is absolutely necessary to do the work. But I also want to see the money come in to enable us to do it.
Right.
Once we start mining and get that stockpile up on surface, we can have an independent group come in and say, gosh, you really do have 1,000 tons or 2,000 tons, and it really does run 30 grams, or it might be 40 or 50 grams of gold per ton. You can bet we're going to high grade our first batch there to wow the market.
Right.
Shortly after that, we will acquire a mill. We've already priced it out and got quotes on it. We've got people that can help us assemble it, as we did back in 1990s. With the mill brought in this time next year, we'll use the winter roads to keep our costs down. We'll also restock with fuel, restock the explosives and whatever spare parts we need. 6 months after that, we'll be pouring gold bars.
So how much is a mill? You've got quotes.
We can get a brand new mill. You can get them down to as low as 150,000 US. We're looking at about $250,000 for a mill. We can expect another $250,000, maybe $300,000 to transport and assemble that mill. We need some additional pieces of equipment because the mill that we're looking at comes pretty well set, and there's the group that's helping us has installed 40 of these over the last 40 years. So they know what they're doing, and it's a very, very simple mill. We just crush the rock, and then we grind the rock in a ball mill. Common, very old technology. Mm-hmm. We then use jigs, which are very simple pieces of equipment, to get most of the coarse gold. Historically, we would get 85% of our gold that way. That's what our recoveries were in the 1990s. And then we'll put a float cells on the back. Again, 100-year-old technology, but it's very efficient, and our test work shows us getting upwards of 95 to 98% recovery using this system.
So what's the number one, constructive feedback you get when you're talking to potential investors? When you've got something that seems so simple and easy. I'm not saying it is, but it seems like you have a good plan. You're kind of avoiding you're taking the easiest path to production and making money, which a lot of juniors aren't doing in this space, right?
Biggest question we have is, can we do it? And I love the fact that I can usually say, or I can always say, we've done it before, at this rate, on this site, using that equipment. Today, our equipment's a little bit better. In the past, we used jack legs to advance our drifts. Now we have an electric hydraulic jumbo, fantastic machine. It drills 5 times faster, and it's very easy on the miner just to shift levers rather than hold a machine up. We have 2 scoop trams. In the past we had 1, and it would break down. Mm-hmm. We have 2 generators. In the past we had 1. We have 2 compressors. In the past we had 1. This is being set up as a project that I personally want to own, and I do own it. Yeah, you're the largest shareholder. So some of the really big shareholders come in and, why don't you just take it private? So I was going to ask you that question, and I think I might have before. Yes, and then it was your exit strategy, but at the same time, you're generating cash flow. Yes, and that comes down to the question. And again, talking cash flows on a project without a feasibility study is prohibited. I know, because that's where I wanted to go with it, right? So I can see where the little bit of a snag is, because, okay, what's the line? What's how long? What's the duration of the mine? How long can you mine it? All that stuff. How much cash flow can we make from it? Those are unknown things. Well, there are some things that I can talk about, and because I was involved and I did it in the past, I can talk about our historic costs. I mean, that's a factual piece of information. Well, then that's where we should go with this, because I understand the take it private thing. It's like, okay, with this strategy, and given the certain things you can't talk about and this and that, maybe that does make sense to an extent. But if you can get enough people to understand the factual history of where you're about to go, then you can make this possible. I think that's the missing link here. Yeah, that's the data that I have and some other people have, but not many people have. Right. How much does what's it cost to mine a ton of rock? And fortunately, we put in 132 meters of ramp in 2021, and our costs have been audited and they're in our financials. So that was under $800,000 to do that. That's a number that people can use. It's hard and it's fast, and it's not a projection or an estimate. It's reality. So we know that we're going ahead, round about $50 for every vertical, every ounce that we get per vertical meter, if we can match the historic. And let me just go over the historic production. we produced, took out 15,000 tons of rock, and we got 15,000 ounces of gold. That's the 1 ounce per ton.
Right.
The modeling that we have used is, and that was from 2 stopes that were 15 meters high in elevation, because we went straight into the hillside and we mined the vein from that elevation up to surface. So perfect. If you get 1,000 ounces of gold for every vertical meter, then we can start projecting. How deep did you say you were going to go? We're going 20 meters below the old stopes. Okay, some people might speculate how much gold we have there, but I'm the classic, but wait, there's more. We have, in fact, 2 veins, because it's a folded quartz vein. When we mined from the base of the hill and we drove the tunnel in, we hit a vein 5 meters into the hillside. And that was fantastic. Lots of gold in it, really great stuff, but there was no material above us. We couldn't mine up or we'd be seeing daylight pretty fast. So we left that and continued on, and we got almost all of our gold came out of the western limb. So now we're going to go down underneath the west and the east limb, so we have twice the vein that we can extract gold on. We'll have the elevation to deal with that. So that's one thing that we can work with. Our operating costs in the 1990s was $300. $300 to take a ton of rock out, to develop it, to take it out, to process it, to cover all the G&A in the camp and maintenance and just keep going. So we can escalate that from the 90s, use inflation figures. You can double it, you can triple it, you can do whatever you want with it. Either way, and those are Canadian dollars, today's gold price at $2,500 an ounce gives us a good margin. Typically, in a shrinkage stope, you can mine anywhere from $70 to $120 a ton in a nice vertical configuration. If it's really wide, it's on the lower end. If it's really skinny, it's on the higher end. Mm-hmm. And that's just general, that's what the industry does. We have a nice vertical configuration. We're dealing with a 2 meter width on average. So we just, in our minds, can escalate it to the high end and still make a lot of money. We know milling costs. You know, they run anywhere from $10 or $15 for a big flotation mill to the high end. You might be $30, $40, $50 a ton to go through on a smaller mill. And there are a number of small operations, so you can look at their cash costs. That's just the ballpark we're looking in. So using either just inflating the numbers up or looking at today's analogies, there's a lot of room for us to make money.
So just the number one sticking point is getting people to understand that, listen, we're not going to do this the traditional way where you get your 43-101, or maybe you get, frustrated and you end up going that way, but right now you're sticking to your game plan. You need to raise the money to be able to execute that, and that's just basically what you're waiting for.
Yeah, and actually, if you want to look at it in a slightly different way, if, we say we're now going 20 meters below and we have drilling down to maybe another 45 meters below that, we expect to get 1,000 ounces or 2,000 ounces per meter. We're looking at 80,000 ounces, 100,000 ounces. Who in their right mind would drill off and report a resource of 100,000 ounces and then do a feasibility study on it? That's insane.
It seems like a waste of capital, right?
Absolutely. I'm going to spend $6 million to do that? No, I'm going to spend $2 million and mine it out.
Yeah. Okay, so how much capital do you need to make that happen?
I need $2 million to do that part,
yeah,
and then an additional $2 million sometime later in the year, maybe the exercise of warrants, could be debt financing if we have a really big pile of gold-bearing rock on surface.
Yeah, I was going to say that would be, you wouldn't have to dilute there.
Yeah, debt, I hate debt. I was a fan of Peggy Whitty's comment. She used the loan to own, and she made the mistake of borrowing money and the markets went against her.
She got margin called.
She couldn't make it. And I will not borrow money unless I can clearly see a path to paying it back. And I've got a decent enough board. They're all heavily weighted on the accounting side, financial side, and I had worked with accountants in the past. You know, Lauren Anderson was a CFO, one of my other companies, a great contributor, former CFO for Glamis Gold. He understood operations and the tendency to want to borrow against a product that you'll get next year.
Yeah.
And he hated it. And he was right.
Well, is there sort of a last message to current shareholders and a last message to potential new shareholders where we can leave this off?
I think it's to understand it, you have to understand 43101 gave us some great slots to put things into, and it's a wonderful piece of regulation that we sorely needed.
But very expensive.
And it doesn't always fit. Sometimes you come across something, and I've used the argument that, 10,000 ounces of gold, 30,000 ounces of gold in 100,000 tons is interesting. In 10,000 tons, it's even more interesting. Put in little bars in there, and you know, I'll walk out and pick it up.
Yeah, I understand it. I understand, you know, why you want to do it that way. Obviously, you just need some people with some big paychecks to come in there and say, okay, let's go do it. Let's have some fun and let's start making some gold bars and stop talking about it. Right?
And the fact that we've done it before, I've got pictures sitting there holding gold bars. Back then, because it was 3 of us doing it privately, it was very nice to be sitting on the side of a lake with the bullion furnace going, pouring little dory bars, drinking a cold one after a hard day's work, and it was very pleasant. Can't do that today, and we're a public company, but what we can do is be a little bit better than we did before.
Mm-hmm. Well, I wish you nothing but the best, my friend. I hope if we can follow up with you, you know, in the summertime or towards the end of the summertime, we'll probably have a little bit more, you know, a concrete story of which path you're going to take, and if you can get someone to buy in, and who knows, maybe you're still sitting in a holding pattern where you're, you know, trying to get that message out. But I wish you nothing but the best. It's not that hard for me to understand. Just people have to have a little, you know, old school mentality. You know? And I'm sure you'll find it.
Yeah, and the 100 tons a day is not the end of the line for us. The Mon Mine that ended up producing 6 million ounces of gold, and I think it was up to 1,800 tons a day. It started at 100 tons a day in 1936. And in fact, its first ore reserve came out in 1938. Pretty ballsy of them back then.
Yeah.
The Discovery Mine started at 100 tons a day in 1949. Mm-hmm. So this 100 tons a day concept is not unusual. It's tried, it's true, it works. And it's something that we just wish to bring that back. 43101, hey, I do those things. I'm more than happy to pump it out. I can do the ore reserves. I do them for a number of companies. It's something that I have no problem doing. It's just each tool has a place, and right now that's not the tool to use.
Let's leave it there, my friend.